Per usual, living on this channel is for educational purposes only and is not intended as financial advice. It is Macro Monday. Let's take a look at some legacy charts. It was quite a brutal 3-day open for assets not named BTC today. SPY down 3%, Q's down 3.25%, Nvidia down 5%, Apple down 4%. Everything just very, very ugly on the day. I guess Apple closed 2% on the day down. But we had another day of dollar down, stocks down, bonds down. Very, very, very bad. We'll get to that, but as far as the crypto ETF flows globally, negative 795, most of that, of course, coming from the US on the BTC side. You can see the breakdown there. Multi-asset wise, for the most part, not seeing too much on the inflow department, a little bit into Ripple. But other than that, it's been outflow city, and along with globally, it's mainly outflows, a little bit in Canada and Brazil. I think that Canada number is actually the Solana staking ETF that went live last week. On the BTC side, you wouldn't know it. You wouldn't know that the world's melting down in the US because prices popped up. Now, is this the beginning of the decoupling? Many people hope and think so. I'll take it. I'll take any day where we have relative outperformance, and I will take any further days of continued relative outperformance. This is how we win the narrative. This is how we win eyeballs and flows and news. And eventually and inevitably, when the market swings back in the bullish direction on the legacy side, it'll be ripping harder for BTC. When gold settles down, the pendulum will swing back to BTC. But again, just this chart, it looks like we are trying to bottom on a channel midpoint. Should we choose to go to the moon, not because it is easy, but because it is hard, I'm thinking 130, 150. This quarter, not impossible. More likely it would be this year. But let's get above 93 first, and then we can talk. Let's get above the daily cloud. The idea of a falling wedge has been warming on me over the past week. I'll take it. Low time frame, inverted head and shoulders, mid time frames, inverted head and shoulders, whatever. All this stuff is supportive of bullishness. Bullish 1050 on the daily, not shown. Bullish 8-hour breakout. I got hate mail on Twitter about mentioning this, just mentioning anything about any time frame that is bullish. People just don't like it right now. But this is the most bullish we've been on the 8-hour since January. Is it some random time frame? I mean, not really. It's a high time frame. It's technically the 16-hour cloud. It's a doubled cloud. Sometimes you have to move at the speed of the market. And yeah, we know the daily's not bullish yet, but the 8-hour has been bearish for months, and it's finally flipping. So let's take it. MSTR, similar story, closing in the cloud again today. No bullish TK cross. Based on the price differential, someone is either arbing the premium here or Sailor is tapping the ATM. I think MSTR was down. I guess it closed flat on the day, and IBIT was up 3% on the day. So there's a 3% differential there. Nevertheless, should BTC go to 130, 150, 120, whatever, MSTR is going to have quite a move. Now, last time we tried to do this, it took 8 months. I don't know if it's going to take 8 months again, because ultimately, what do we want? The same thing. Price above the cloud, price above the midpoint of this channel, and eventually a journey to oversold territory. It certainly has a history of that in March 2024 and November 2024. That would be a guidepost, not a call. This looks better and better and better as this hits these checkpoints. So we're not quite there yet, but I did add to my own MSTR stash today. Things like SMLR, Mara, other Bitcoin treasury plays haven't been so lucky. I didn't pull up MetaPlanet, but MetaPlanet also I think was down a little bit over the past couple of weeks. But here's SMLR, and it's given back everything from 77. It's down over 50% in just a few months. Maybe this is something to keep on the watch list to consider once BTC momentum kicks up again. Down here, I think it's a bit of a guess, but they clearly have a strategy playbook, MSTR Sailor playbook, and miners I'll get to at the end. I wouldn't touch those at all, personally. Schedule this week, we've got Fed speak out the yin yang for multiple days here, PMI, and then to me, some not so important stuff at the end of the week. Next week is the premier week. We've got GDP and employment and PCE next week. It's going to be quite the week on the economic data front. PCE is expected to come down. I'll get to that. GDP potentially negative, depending on how they want to count that. depending on the gold numbers, depending on the New York estimate. We'll get to that. And employment still looking fairly strong. Jolts as well. So next week is going to be super fun. Excited for that. As far as the Fed meeting probabilities, currently there's no cut or hike expected for next meeting. President Trump very angry at Jay Powell. That's probably not helping things. Markets don't seem to like the idea of the Fed not being independent. And I can only imagine the tweet storm that we're ready to experience on May 7th when that meeting occurs. They will probably be unlikely to even provide very much forward guidance because they are waiting for the tariff stuff to work its way through the ecosystem, unemployment relative to the tariffs to work its way through the ecosystem. So they probably just say nothing about anything, and we're just on a live meeting-to-meeting basis. Now, the probabilities are pricing in 4 cuts this year. On crypto side, we'll take it, right? Equity side, they'll take it. Mortgage side, they'll take it. Whatever. Like, if we normalize rates, we normalize the yield curve, great. But what we'll actually get, I'm not so sure. You would think, based on inflation where it's at, coming down to the 2% target, based on where unemployment is sitting, they have a reasonable data vantage point to bring things down slowly. But Jay could easily say, you know what, we're just not sure. Tariffs are a big wild card here, and we don't want to make things even worse than they could already be. Now, we haven't seen trueflation spike yet. Again, on the tariff side, if 90 days from the tariff pause we see this spike, okay. Is the Fed just going to sit on their hands for 90 days and wait for these deals to come through? Maybe. They might. But based on the real-time data, we are not seeing inflation spike just yet. But this is the first thing I would look at if I was concerned about tariff stuff. A lot of the demand got pulled forward pre-tariffs. So we're going to see a lot of numbers come through that look really, really bad going forward, because now we're going to have to normalize whatever the next thing is in tariff land, Tariffville, on the supply-demand curve. Current CPI, 21 days in, 2.38. That's slightly down on a month-over-month basis. And PCE projected to continue to decline. So that's what we like to see. Now, the hawks would say, we're not there yet. We need 3 to 6 months of 2% on PCE and CPI. The doves would say, we're not there. We're getting there. It's going to take a while. The housing data is going to work its way through the ecosystem. And the doves would also have to acknowledge that, okay, maybe the tariff stuff isn't going to be as bad as we think it is. Or they could say, you know what we could do is cut here and hike later if things look bad, but we are rather restrictive based on where rates are sitting. Real rates are rising if rates hold here and inflation CPI is dropping. Now, the real mystery next week is going to be, what is the GDP number? It's Schrodinger's GDP. Is it up? Is it down? Is it negative? Do they take the gold adjustment out? Do they have multiple numbers that they release? Including gold, the Atlanta Fed is estimating a negative 2.2. Now, from memory, I'm going to say that the Atlanta Fed has mostly been correct, but it really hasn't been difficult to estimate GDP. The New York Fed is still forecasting over 2.5%. Okay, fine. I think they're going to be way off based on the Atlanta Fed number, but we'll find out. We'll find out. And it still could be negative even with the gold adjustment done here in the GDP Now forecast. But the potential for a recession is certainly there, more so than it ever has been in the past couple of years. And it is a natural part of the business cycle. But it doesn't help that this feels a bit manufactured by the orange swan. Looking at reverse repo, spiked up a little bit today, 114 from 58 billion. Just important to keep an eye on that for liquidity purposes in the pipes, but looking okay for the moment. The dollar, not looking okay, opened and got angry today. Just immediately gets crushed. You would think BTC would be more bullish than it even is based on past history, past correlations. It's possible that the ETFs here are actually hurting us because we are in the risk-on conversation. It's possible. I think in general, ETFs do more good than bad on net. But in the current moment, you'd expect Bitcoin to be a lot higher, I'd think. Potentially the market cap is as big as it is, and it's just difficult to move. Okay, fine. But if you were to tell me the dollar was below 100 and we weren't above 100K BTC, I wouldn't believe you. So it does feel like Bitcoin is due for a move higher. And there was a point in time when the euro correlated pretty heavily with BTC just because most of DXY is the euro, and the euro is inverse to the DXY. So if DXY is going down, euro is going up. If DXY is going down, BTC should be going up as well. There could be a lead lag relationship here. I think historically there has been. So we're headed in the right direction where we need to go. Gold is higher, liquidity is higher, dollar is lower, and euro is higher. At one point in time, I know I've said this out loud, but if you're rooting for BTC, you kind of have to root for the euro, because rooting for the euro means the decline of the dollar, which historically has been very good for BTC. On the monthly here, the euro certainly looks better than any US equity, right? It's making highs. It's above trend metrics. It's above a diagonal line here. And we are making the euro great again, mega, as they say on the street. USDCNY also curiously up here at 7.3, looking for further devals, and that pushing BTC higher. Global liquidity is going in one direction. As Lynn Alden says, nothing stops this train. USDJPY looks ready to break down after a head and shoulders here. Shoulder, head, shoulder. It's below the weekly cloud. Any yen carry trade should have already exploded, I would think. Any risk manager, hopefully at this point, hasn't put that trade back on or allowed that trade to get put back on. So this is something else that's hurting tech if that was going on. And again, where's the money going? It's going elsewhere. It's going outside the US. It's getting sent back home. It's getting repatriated as people are just throwing up their hands and saying, okay, enough's enough. We'll go play in our own sandbox. US oil also down significantly, still here at 62, 63, likely sniffing out a global slowdown off the back of tariffs as well. And that will help the inflation numbers. 10-year yield up there at 4.4. Once again, we're knocking on the door of 4.5. There's always a part of you, the devil and the angel. Part of you is like, yes, that this is the devil speaking now. The devil wants rates to go to 5. Let's see what happens, right? The angel's like, that would be very bad. We don't want to live in that world, but that's where we're headed. That's where it looks like this is trying to go. And at some point, this role will require intervention. And that's what Bitcoiners have always been saying. We continuously have these boom bust cycles because of the way the system is structured. Where we're going to start to see cracks at the seams are when liquidity gets sucked up and there isn't any left, or when things like yields spike beyond 5%. But this is not currently the direction in which the Trump administration hoped. They hoped that the 10-year would come down. And generally what we've seen, if you think of the 60-40 portfolio, stocks down, bonds up, bonds flight to safety. There's this yin-yang that we typically see. We're not seeing that here. We're seeing stocks down, bonds down, price-wise. So that's bad for everybody in the 60-40 equation. Here are the ETFs for the bond side. SHI continues to be the lone winner, making higher highs here, trending higher above the high time frame cloud. TLT is headed again for intervention territory. It's headed for regional banks being in trouble again. IEF basically flat, AG basically flat, but you're not getting any help on the 40 side when AG looks like this. And the 60 is down 20+%, potentially year to date or over the past couple months. But the 1 to 3 year continues to look like the place to be. The 10-2 yield curve is continuing to get deeper in the uninversion, and it would make a lot of sense if we see a recession, as we typically have when the 10-2 uninverts like this. The 10-3 month has reinverted, oddly, but something's got to give here eventually. What we haven't seen yet is runaway unemployment. So that's the next thing to watch for if we see it. On the gold chart, clearly runaway parabolic rally. Similar to BTC, it's not really affected by tariffs, right? It's anybody can buy it. It's global. It's a commodity. Has no owners. So it's done very well. It also has had technical rationale for the breakout at 26, for the bounce at 3,000. And it looks closer to me up here, closer to a sell than a buy up here. It does feel like it's getting a little parabolic. No Williams fractal trailing stop loss breach yet, but that's something to watch for. There's no sell signal here. The last sell signal on the cloud was the bearish cross at 26, and that's the next thing to watch for. What does the trailing stop losses look like? What does the cloud look like? So far, so good for gold. And that's where the bullishness ends, because equities, in the US at least, continue to look awful and continue to likely need months of recovery and repair. This is the S&P, and it's pretty simple. Below the cloud, you're bearish. Above, you're bullish. and the entry is in the transition state, the transition phase. So we're bearish with no transition in sight. Okay, next chart, right? It's really that simple when you're talking about trend metrics. You can look at it whatever you want, the 5200, the 1050, alligator, whatever. It's all going to tell you the same thing. This is not a pretty picture for the S&P. Qs, similar, bearish and will remain bearish, likely for months. Now, these could have some announcement-driven moves higher based on tariffs getting reversed. I doubt it, but that's always a possibility. But these are definitely trending lower across the board. This is the Mag 7 ETF MAGs sitting there at lows. Doesn't look good. Now, you can say this is oversold. You could say it's below some weekly B-band level. You could make some rationale here, but ultimately, stuff like this or anything does best above the daily cloud, and it's very far away from that. So what I would need to see first is at least a double bottom, at least get us back to 46 on this ETF, but we're sitting at lows. Not the place I like to buy. Netflix is probably the singular bullish stock out of the Mag 7, Tesla being the most bearish, but Netflix here is sitting with a bullish TK recross price above cloud. I mean, this is what you want to see. It also is trying to negate that head and shoulders, shoulder, head, shoulder. So just based on technicals, this is setting up very nicely for continuation. And this does not look like anything else in the Mag 7, anything else for the most part that I've seen in the major market cap names on the equity side. SMH looks abysmal. Broke down in February, March. That's all she wrote. The good news for all this stuff is, like alts were bearish, altcoins were bearish for months, and they're starting to turn a corner. The easy trade is going to be waiting for that to happen on things like SMH or SPY or TQQQ, whatever, pick your poison. Everything is so bearish right now. It just requires patience. It's either that or you're just dollar cost averaging blind levels every week. Whatever works for you, fine. But trend metrics are not on your side for the dollar cost average. If you're dollar cost averaging, this is what you want. You want prices going down. You want more purchasing power to acquire more shares over time. But this is not a short time horizon setup or trade. This is very, very bearish for almost everything. IWM looks like an altcoin, right? It's gone from 245 to 182 in a couple months, back into the multi-year range. Just looks like a massive, massive avoid. Very, very bearish. DJI, same thing, very bearish. Losing over a year of gains at this point. And the entry is going to be pretty simple when you see it. It may take 3, 6, 9 months from now. It's going to be a long time before that turns around. And KRE could flag out here on the weekly and could continue to break down. And I think that would be, again, the devil on my shoulder. Very interesting. What happens when KRE gets to 40 again? Do we see regional banks in trouble? What does TLT look like? Is TLT breaking lows there? Are we starting to see this held to maturity mark-to-market shenanigans where the BTFP cannot bail out these banks anymore? But this certainly doesn't look bullish either. On the China side, this is FXI, China Large Cap ETF. It looks okay. It's not screaming bullish, but it is on the bullish side of the cloud on high time frames. It's been very volatile, very noisy. Is it a slam dunk setup? Not really, but it looks better than the US. You can say that, certainly. And this is all world ex-US VEU. Similar idea here. It's not a great setup or a setup, but trend-wise, it's not going to zero, right? I'm sure there are better versions of this, better ETFs that you can look for. But if you're looking for something to do that's not US, I'm sure it exists. It's out there. You just have to look around because a lot of this stuff looks decently okay ex-US because that's where the money's going. The flows are going back home. On the crypto side, this is Coin. Coin looks like total too. If you're bullish alts here, you'll love Coin. If not, you'll avoid it. I'm worried over the next couple months that we're going to see a mega head and shoulders emerge out of Coin, even if it bounces here. This is something to think about. Just because we're seeing the cryptofication of traditional brokerages like Schwab, we're seeing Kraken add equities. Everybody's going to do the same thing. Going forward, they're going to have everything, and that's just going to compete with Coinbase market share. This is Hood, still looks bearish. The time to trade Hood was back here, 2023. We talked about it on the channel, and we talked about it for a long time on this channel. And that's what you have to do. You just have to wait. Watch this stuff. Watch it bottom. I mean, this took 2 years to bottom. Okay, is the S&P going to take 2 years to bottom? I don't think so. But we could have a lost decade. I don't think we will. But I see zero reason to force anything up here. This looks abysmal. You've got a huge pattern and you're below the cloud. So it's either got to negate this pattern or break down. But until then, I don't think there's anything to do on Hood, which has had a great run. Maybe there's a like Hood Schwab pair trade or a Hood coin pair trade or coin Schwab pair trade to think about. This has a lower time frame head and shoulders. Danger, risk. It's trying to break out. So it'll be interesting if and when they add crypto and what that does to revenues and how that affects Schwab. But again, something probably to keep an eye on here. If Schwab starts to take some crypto business away from Hood, away from coin, maybe this starts to break out a little bit. Right now, pretty much just flat. Miners WGMI looks pretty bad still. It's broken down from the last time I tried to trade it at 14.5. It has a growing bull div here, but it just looks very bearish. Similar to 2022, maybe you just wait for a Tenkin breach here on the blue line. We've basically been below the Tenkin the entire time. So this either it needs to bottom out or roll higher on trend metrics on lower time frames, something. This just does not look good. And fundamentally, miners are getting hit on all angles. Network difficulties at an all-time high. Transaction fees are very low to negligible. And the AI HPC demand narrative has really fallen apart with this AI stuff pulling back a lot. So like everything else, it's just something to look at once a week. Okay, is it ready yet? No. All right, next chart, right? Like that's all there really is to say about that. You don't really need to try to squeeze blood out of a stone. It just isn't there, right? It's just not time. It's just not time. XYZ block square. This is another one that just didn't go anywhere, right? It set up for years and didn't go anywhere and has pulled way back. So is this a trade to me? No, it's not. There's nothing here. Back into this huge range. Leave it alone. Next chart, next trade. And lastly, I just thought I'd look at Fold, one of these, I think it was like a reverse SPAC or something. I forget the acronym that it went live with. Low time frame chart. It just launched recently, but also doesn't look great. So maybe make a watch list of crypto stuff outside of BTC, and there'll probably be a time for that stuff. MSTR is clearly the strongest amongst the group right now, but that won't always be the case. There could be a world where MSTR looks like gold does, at like in the 600s or something, where it looks like it's on the latter stages of a parabolic exhaustion. And maybe some of this other stuff on the periphery starts to look a little bit better on the crypto side. That's all I got for this one. If you like, dislike, comment, share, subscribe, and happy trading.